Welcome back, dear traders. Our analysts are ready to share their red-hot market review. Today, market participants are alert to policy decisions of central banks on interest rates and speeches of their governors. Markets are trying to puzzle out further monetary policies. Bearing in mind aggressive monetary tightening to combat inflation, risky assets are losing favor with investors. However, stock investors have faint hope that the losing streak could be over. The benchmark indexes closed yesterday with significant gains. The Dow Jones closed 1.4% up. The Nasdaq finished a 7-day losing streak and closed with the biggest gain of 2.14%. And the S&P500 grew 1.33% to close at 3,979 points. The major stock indexes wavered between gains and dips in the pre-market, but moved down in the early New York session. The S&P 500 is expected to trade in the intraday corridor between 3,800 and 4,010 points. Yesterday, the US stock indexes printed the biggest intraday growth since August 10, and the stock market perked up amid foreign yields of US treasuries and slight signs of a slowdown in inflation. Nevertheless, the S&P 500 is still 8% down from its peak of August and is 17% down from the beginning of the year. Importantly, the rally on Wall Street was triggered by faith but not solid fundamentals. Moreover, some Fed policymakers made comments which wrecked the hope. Curiously, investors neglected the negatives and focused on the fragile hope. The Fed's Beige book revealed that the US economic growth is likely to shrink next year, whereas inflation is showing signs of a slowdown. Such prospects could soften the extremely hawkish stance of the US Fed. Besides, Vice Chair Lyle Brainerd said that the central bank would be committed to its struggle against inflation as long as necessary, and she also noted risks related to aggressive monetary tightening. Today, investors are anticipating a speech by Jerome Powell, who will hardly express sympathy for the stock market. In the light of previous hawkish remarks by the US Fed and the solid macroeconomic data, the market sees the 80% chance of a rate hike by 75 basis points this month. Earlier this week, the Bank of Canada increased the key interest rate by 0.75%. And today, the ECB also raised interest rates to the same degree. As for the economic calendar, traders assessed a weekly update on the US unemployment claims. The number of first-time jobless claims declined by 6,000 to 222,000 last week, the weakest level since late May and much lower than the expected 240,000 claims. The stocks of top US companies such as Apple, Tesla, Microsoft, Amazon and Meta traded in the red in the New York pre-market. GameStop shares jumped 12% in the pre-market after the video game retailer reported on its quarterly profits. The results were poor as net sales dropped 4% on a yearly basis in the second quarter to $1.14 billion, thus increasing the net loss by 76% annually. However, the negative was offset in full by the news on a partner agreement between GameStop and FTX, the crypto exchange of Sam Bankman-Fried, and the US dollar index, which has been hovering at around 109.50 for most of the day, is trading higher in anticipation of Jerome Powell's speech. The index has approached 110 points, and its intraday corridor is seen between 109.50 and 110.50. On Wednesday, the US dollar index perked at 110.79, the strongest level since June 2002. The trading instrument is moving to new highs. The remarks by Fed's policymakers yesterday dispelled doubts about the Fed's commitment to its fight against inflation. There is a slim chance of a mild rate hike at the policy meeting in September on the back of global headwinds, recession risks, COVID restrictions in China, and the energy crisis in Europe. Investors are taking refuge in the US dollar, and the euro dipped again below the parity level despite the aggressive rate hike by the ECB. The pound sterling climbed above the 37-year low of yesterday, and the yen also showed some resilience today. Earlier, it suffered the most from the dollar's rally, and the USD CAD is trading higher today at about 1.3140. The trading corridor for today is defined between 1.3110 and 1.3180. The Bank of Canada increased interest rates to the highest level in 14 years and signaled that the cycle of aggressive tightening is not over yet. In the expected move today, the regulator raised the overnight target rate by 0.75% from 2.5 to 3.25%, the level not since April 2008. The Bank of Canada is taking the lead among influential central banks in terms of monetary tightening. However, the loonie cannot assert strength due to foreign oil prices. Crude oil slumped to the lowest level since early February 2022, and the benchmark rates lost more than 5% and fell below $90 yesterday. Today, oil prices are recovering, and Brent crude futures added 1.22% to trade at 89.08 a barrel. WTI futures grew 1.66%. The crypto market is trading mixed today in parallel with the stocks of the high-tech companies. Bitcoin is trading in a narrow range between $18,800 and $19,400. The asset is likely to trade flat today. An exit beyond any of the borders will indicate a further trajectory. The crypto market is digesting the news on the lawsuit worth $258 billion against Elon Musk. He is accused of creating a Ponzi scheme to promote Dogecoin. According to the complaint filed to the Federal Court of Manhattan, Elon Musk and his companies Tesla and SpaceX deliberately pumped up the price of Dogecoin by 36,000% in 2 years to reap humongous profits. Notably, despite these charges, the token is rising in value today. And the stock market is trading under high volatility and remains vulnerable to some unclear risks. Make prudent trading decisions and trade with the profits. See you online tomorrow.